Strategy 1, Strategy 2, Strategy 3. These are by far the best trading strategies that will change any losing trader into a winner. In this video, we will explain all criteria to enter and where to exit. I'll give you free PDFs for each strategy so that you can practice them on your own. I'll also give you tips and tricks to make them even more accurate. Enough with talking, let's get right into the value. So first on our list is the midweek reversal, or basically the peak formation after 3 days of rise or drop. We call it an end of cycle entry, which is basically a reversal trade. In this particular trade, we need to see 3 days of rise after location of a previous peak formation high or low. So in this case, we can see that the market turned from this particular point, and then from there we had first day of rise like this. Then after that, this was not a day of rise, this was not a day of rise. We can see that this was basically consolidation without any unilateral movement. From there we had this day of rise, and then consolidation, and then the last day of rise. At the end of 3 days, we expect to see an M or W pattern depending on market context, or basically a head and shoulder structure. In this case, we were issued multi-M pattern, which was first leg, second leg, and the market started to go to the downside. This was now another point of reference to start again our count. From there, we start again to look for 3 days of drop. You can see this was a day of drop, and first day of drop, then we had another day of drop, and then we had the last day of drop. After 3 days of rise or drop, we expect to see a multi-session W or M pattern. We can see that we had the first leg and then we had the second leg, meaning this was now another point of reference. So our entry was going to be on the second leg, on the smaller time frame, of course, which is the M15 time frame, and then the market went to the upside. After that, we start again to count. We can see that this was now a new point of reversal, or this one. There were no 3 days of rise here, there were no 3 days of rise here. 1, then there was consolidation 2, and we reached this point which could not be entered because it was not satisfying the rule of 3 levels or 3 days of rise. That is all for this particular. So this next strategy will basically need an indicator, only one indicator that you need to put on your charts, and this indicator will actually tell you where to buy and where to sell. It also utilizes the principles that I've been telling you on the market maker method, which is basically trading in line with the trend. This one does not focus on reversals, but rather it trades in line with the trend. So what do we use? We use an indicator called the BTMM Pro, which is an indicator you can get as well using the links that I've left in the description box below. So come to the BTMM indicator, make it available on your charts, and then from there it will paste these particular buy signals. So these buy signals will come, of course, with the suggested stop loss price and the suggested take profit price. But we know that if we understand the market cycle, we can as well swing throughout these particular signals. We can see a buy that was issued, and whenever this is issued, this is sent directly to our phones as well. So this buy actually moved right to the end of the cycle, and if you entered this particular point, you could have been holding this particular trade up to the top part. We can see another sell signal that was issued at this particular point, and the market just dropped and melted right like that. This is on the H1 time frame, and we are saying you can as well use this as your only trading strategy, whereby you just look for or wait for these particular buys and sells as they come. We'll actually go through the examples of this particular indicator before we move to the next entry strategy. In this strategy, you need to have indicators on your charts, in this case the 13 EMA and the 50 EMA. These two are going to be your guidance to make your entries. The first step will be to basically find a peak formation low, or basically a reversal W pattern, M pattern, or basically a head and shoulder structure. In this case, we had a W pattern and then the market went to the upside. We need to see an impulse that breaks the high of the W pattern, breaks the neckline of the W pattern, and after that we need to see the market pulling back to the 50 EMA. At the 50 EMA, we need to see a retest and probably a trap below the 50 EMA and candle close above the 13 EMA for us to get an entry to go long like that. In this case, we start again to look for the M or W pattern. We can see that we had this particular M structure, which is an M pattern, and then we had an impulse that broke the neckline of that M pattern, and then the market came back to the 50 EMA and continued with the trend. In this case, we had a W pattern again that was actually broken with this impulse, and then we saw the market coming back to the 50 EMA to shoot to the upside like that.